Hello everyone, welcome to Accounting 210. In this video, I want to talk about your quiz, which is related with our chapter 3, journal entry for our job costing, that part. I graded your quiz. I found out there are some common mistakes that students will make. So I want to talk about the key part, especially the manufacturing overhead, one more time in this video. Chapter 3, we basically learned two things, right? First thing is how do we find the predetermined manufacturing overhead rate? And then second is how do we do journal entries? General idea in this chapter, students said, hey, I'm really confused with the manufacturing overhead. What is manufacturing overhead? So that is the cost that should be included in the product, but you cannot trace it. So we said for the product, right? We said, hey, you want to know what is the cost of making this pen. We don't talk about period cost like selling, administrative. We just say, what is the product cost? What is the cost in this inventory? What is the manufacturing cost? So we said you have to have direct labor, direct material, and then manufacturing overhead. So you have to make sure all the costs are related with manufacturing. We can trace direct labor, we can trace direct material, but we cannot trace manufacturing overhead. We said there are three different parts: indirect material, indirect labor, and then other manufacturing overhead. Those things are in chapter 2, so make sure you understand chapter 2 before you go to manufacturing overhead. So, okay, so that is just a definition of manufacturing overhead. In chapter 3, the hard part is you will have 3 different situations of manufacturing overhead. You will have actual manufacturing overhead. You will have a budgeted or expected manufacturing overhead, and then you will have allocated manufacturing overhead. So some students are already crying and said, oh my gosh, what are these? What are these, right? So why we have these 3 different things? As I say, ideally, you definitely want to get your direct labor, the actual. So direct material, how much you really use, and the actual manufacturing overhead. So that's ideally should be included in the product. But in the reality, for the manufacturing overhead, I'm just making an assumption. Let's just say, okay, so we just have one manufacturing overhead. This is just an example, right? We said, hey, making an example. We said your manufacturing overhead is just the utility, is just the light, let's say, just the light bill, right? You turn on the light, it's very easy, like I turn on the light, I turn off the light. So you can say, that is my manufacturing overhead. So I'll just say actual number is $1,000 for that year. For year 2019, we just say for year 2019, actual is this much. And then you said, hey, in 2019, you also have direct labor, maybe 500, you have direct material 300. So your total in that year 2019 product cost is 500 plus 300 plus your 1,000 is 1,800. That's your total product cost. So that's what we learned in chapter 2. But in chapter 3, we said now we are doing for each job, right? You are doing for each job. So here is, look at this, right? So you have 3 jobs, okay? You have 3 jobs. You are making 3 different pencils. Sorry. You make this pink one, you make this blue one, you make this green one, right? So you have 3 different jobs. Okay, now we have 3 different jobs. We have 3 jobs. We have pink, we have yellow. What did I say? We have pink, we have yellow, and then we have this green. So we have these 3 jobs. But we don't really know. We don't really know. We cannot really decide how much utility, how many watt, we say how many watt, like is used by this job, is used by this job, is used by this job, because it's light. You really cannot trace it. You really cannot trace it. But then we have to make the selling price. We have to find out what's the cost for this job, right? What's the cost for this job and what's the cost for our this job? We know the actual is 1,000 by end of 2019, right? December 31st, we got all the bills, like I pay utility bill every month. By the end of 2019, I got all these bills. And I calculate total actual is 1,000. But there are two questions. First is we don't really know, like this one uses 500, this is 200, this is 300, we don't really know. And second, you don't get the actual until the end of the year, but maybe you finish this purple, pink one, let's say by February, right? You finish this yellow one by August. You finish this green one by December, maybe we just say. So you cannot say you wait until December 31st. You got all the actual to sell your pink one. You want to sell it by February. But at that moment, you don't really know what is the utility for this pink. Maybe you know the utility for January, February for all of the jobs, but you don't know what is for the pink, right? So that is the problem. We cannot use actual when we really do our job costing, because you cannot trace it because of a timing difference. So we have to think about, so we have to have our expectation, expectation or our budget, based on our previous experience. We said in 2018, we actually used $8,000 of the utility. So we estimate, right? It's expected, also estimated. We estimate, we budget, we said 2019, we budget of, 800. We budget like 900 of the total utility. We budget our total utility as 900. We said, we thought for a bit around 900. And then we said this 900 should be related. Remember, right? This is December. This is January 1st, 2019. We don't really know much the actual of 2019. We are estimating, we are budgeting, we are expecting. So we said, hey, we think total should be 900 utility. We said, why we thought it's $900? Because we estimated, right? We estimated our machine hours, right? Like the light. I turn on the light, I turn off the light, This is the machine. I estimate the machine hours maybe will be 30 hours. Will be 30 hours to make all of our 3 products. Okay, so we estimated the first day of 2019, we estimated we will have 30 hours machine hours. We turn on, turn off the machine, we use 30 hours. So that will estimate we have 900 of utility. At the beginning of 2019, we estimated predetermined rate, right? We estimated that for 1 hour of the machine, every time we turn on the machine, it will cost $30 of the utility bill. So we allocate our estimated 900 manufacturing overhead based on estimated cost driver. With a cost driver, most likely can be direct labor hour, related with how many hours the workers really work, machine hours, or the direct labor, the salary, the actual dollar amount. So you need to read the textbook. There is no like one answer. So you need to read the textbook. But basically, the first thing you need to know is at the beginning of 2019, we don't want to wait until the actual, right? That will be too late. We said at the beginning of this 2019, we estimated, right? We estimated your manufacturing overhead will be 900 for the utility. We estimated you will use 30 hours of machine hours. You will use 30 hours of machine hours. Okay, so then what do we do, right? And what do we do? Then, so this is the beginning of 2019.
And then during, sorry, I have to go here. I'm sorry, it's not well organized. So during 2019, right? During 2019, we can get the data for the actual manufacturing overhead, right? As I said, hey, January, maybe we found the bill, I don't really know, but maybe it's $200. And then we kind of know in January, we used 5 hours of the machine hour. And then for this purple, for this pink pen, and then February we use another 100. The actual is maybe like 3 machine hours, and then we also used for our pink, right? We also use our pink. So we finished pink. Remember, we said pink will be finished in February, and then so we have a March. We have all the actual, we have April, we have all the actual, blah, blah, until August, we have all others. So this is for the pink. Then until August, we worked on the yellow, right? We worked on the yellow. And then from September all the way to December, we worked on the green. So during this year, you accumulate all this actual data, you actual got the bill, you actual paid your utility like $200 or $100. So that's we say every time when you have actual, then you don't do anything. You just accumulate to this pool. So this is your actual. So you put 200 for January, you put 100 for February. So you put your actual in this pool. And February, right? So February 27th, 2019, you finished your pink one, right? You finished your pink one, okay? You finished your pink one. And then you found out you actually used, because you have the record, right? You actually used 8 hours of the machine hours. So you actually used 8 hours of the machine hours. Then now you can allocate your manufacturing overhead for this pink pen because you use the predetermined rate, $30, and then you time your 8 hours, you get $240 for your pink pen, So that is our allocated pink pen. It really has nothing to do with your 200 or 100 or actual. It really has nothing for this specific job. It kind of really have nothing to do with your actual number. So you just allocate. You allocate this, and then so you did this pink pen, right? You did this pink pen. Then we said, oh, you also did a yellow pen until August, right? Until August, you do the same thing. I don't have the data, but you kind of do the same thing. You allocated maybe, let's say, $500. Okay, you allocate $500, and then for the green pen, you allocated maybe another $200. You allocated another $200. Okay, so at the end of the year, you finish all these 3 pens. You got these 3 allocated manufacturing overhead. But you also at December 1st, right? At December 31st, you got the actual. You also got the actual bills. You got the actual bills is $1,000. You got the actual bill $1,000. But then you also allocated to 240 to your pink pen, 500 to your yellow pen, and then 200 to your green pen. So your total estimation is how much? Is 940. So your estimated is not your allocated. I'm sorry. You allocate 240. You allocate 500. You allocate 200. So your allocated, right? So here is you allocated 940 to your three jobs, but actual is $1,000. So now we do our adjustment for all of these 3 jobs together. So end of 2019, you know, actual is 1,000, right? Because we got the bills every month. Actual is 1,000. You allocated 940, so you under allocated $60. You have to allocate another $60. You have to allocate another $60 so that you can close your manufacturing overhead. So this is the general flow of manufacturing overhead. The actual, okay. So the actual is just accumulated to this pool. It's not going to your each individual. It doesn't go to your each individual the total cost, because you cannot really decide. Ideally, you should use the actual, but practically you cannot really know for this pink pen how much is really used for this one. So what we do is we accumulated all the actual, and then later we allocate to this job. So the allocated manufacturing overhead will be included to get the cost of this pink pen. So it's not accurate. Definitely it's not accurate, but we don't really do adjusting for each one. What we do for this class is we wait until the end of the year. We do the overall adjustment for all of the jobs. Okay, don't know you got kind of confused or you feel better. So I'll put this aside, and then we just go through your quiz briefly. So the first one talking about your rate. So we said your rate is always your estimated manufacturing overhead divided by your estimated cost driver, right? Cost driver, right? So we said beginning of the year, we estimated will be total manufacturing based on total machine hours here. So this one said you estimated 960,000 based on 300,000 machine hour. So it's the same, right? So 3.2, every time when you have a machine hours, you kind of allocate $3.2 to your manufacturing overhead. So first thing is buy the material. I'm not going to talk too much. It's from your textbook, right? So from your textbook first. Every time you buy material, so you increase your material inventory. Sorry, I'm not writing. You decrease your cash or you increase your account payable. Sorry, I'm just writing. Okay, so I'm not going to say too much. Second is you use your direct material, right? So you use your direct material. So every time when you use direct material, we can trace this direct material to our job. Our job is this one. So now we just put work in process directly. And then we have this material, raw material, we decrease $480. So we have a total T account for work in process. Remember, we have 480 here. I just put it, carry it to debit here. And then third is that direct labor. So that's also from your textbook, direct labor. Your textbook also said indirect material. When you have indirect material, we said you increase your manufacturing overhead. It has nothing to do with your cost of work in process because you are just accumulating all the numbers. Later, when you allocate, that goes to work in process. At that moment, you just know that is your manufacturing overhead. You don't know how much it will go to your working process. Okay, so but we don't have that one. We just say, hey, you use the direct labor. You use direct labor. So sorry here. So we still go to working process because we can trace it really goes to our this job, right? 330, and then it's payable. So 330. So we have another working process is 330 from our labor, and then. You pay supervisor in the factory, so this is your manufacturing overhead, which is indirect labor, the same as your textbook, indirect labor. And then also the sales, this is our period cost that has nothing to do with our inventory. So we increase our manufacturing overhead. Remember, we do not put in working process because total supervisor is 810, but we don't know how much should go to this SIUE, this job. We don't know how much at the moment, right? We just know like we said, hey, every month you got your utility bill. So you just increase your manufacturing overhead directly. You just increase your manufacturing overhead. You don't know how much goes to your that specific job. You don't know how much goes to that specific job. So that is 810. And then we have a salary expense. We expense this period cost directly is 1,000. And then we decrease our cash 1,081. So that is just accumulating. It has nothing to do with your work in process. Has nothing to do with your work in process. And then you allocate now, right? So you allocate, right? We said, hey, at the end of February, you figured out that you actually used 8 hours. So you allocate because we said each hour will cost your manufacturing overhead. You actually use the 50 machine hours for this job. Because you can trace this information, right? You trace your machine hour only for this job. You trace for your SIUE job, you totally use the 50 machine hours. And each machine hour will cost 3.2 manufacturing overhead. So we allocate our manufacturing overhead is $160 to this job. So now I can increase working process 160. I decrease my manufacturing overhead cost. I already allocated, right? I already put this manufacturing out from the swimming pool. So I allocated. You allocate to this job, you allocate to this job, you allocate to this job. So I allocated 160 to SIUE job. So I increase my working process, I decrease my manufacturing overhead. So I have another 160 of my allocated manufacturing overhead. So now you finished, right? So we finished. So we will have our finished goods, and then we decrease our working process. How much our working process is the total of this much. Direct material, direct labor, and then your allocated manufacturing overhead, which is how much? $970, right? So this is 970. Students say, hey, how do you get this? Why you put it to finish the goods? Why you can go to textbook, textbook explains to you. But from our financial accounting, you also need to know from working process, next one is finish the goods. And then finish the goods is you debit working process balance is 970. You want to close it. You want this is to be 0. So you have to credit this 970. That's the reason you credit working process. And then this one then goes to your debit side of finished goods. So you have finished goods 970. And then what will go to next one, right? From working process goes to finished goods, from finished goods to our cost of goods sold. You want, when you sell your finished goods balance will be 0. So you have to credit your finished goods. So that goes to our cost of goods sold. So we credit our finished goods and 970, we debit our cost of goods sold 970 when we sell our product. And then will be 70% higher. Sorry, I don't have a calculator. I'm not going to write. But basically, you get your account receivable or cash, and then you have your sales revenue, which is 1.7 or 170% times 970, 170% times 970, because you want to charge higher than the cost, right? Okay, so last thing is, now you have to do your adjusting journal entry. You have to do your adjusting journal entry. So basically you had this job, you had that job, you had that job. So after the whole year, so some students may confused is because we only used this job as the example. But this is not the only job. In the year, you had many jobs. You maybe have 10 jobs, 18 jobs or whatever. So like you had this pink, yellow, and green. So at the end of the year, we do adjusting journal entry. And you remember, like every time when we accumulate our manufacturing overhead, every time when we got our bills, we just accumulate to our that pool, right? So you have the actual number of manufacturing overhead. But this manufacturing overhead really has nothing, it's not directly related with our that job. So some students, when they do the cost of your product, they said, hey, this one plus allocate plus your manufacturing overhead. No, your manufacturing overhead, this raw data of 810 has nothing to do with this job because it may allocate to other jobs, right? It may allocate to other jobs. So we just have the direct labor, direct material, and then you're allocated only to your that job. So at the end of the year, out of all the jobs, you found out, you finished all the jobs, right? You finished all these 3 jobs. And then you found out, oh, your actual manufacturing overhead is 1.0. I'm just saying, I'm not going to say too much, but its debit side is always your actual. And then we said when you do journal entry, you don't use your budgeted anymore. You got your first rate, you don't need your budgeted anymore. Then you do your allocation. We said your allocation is your rate 3.2 times your actual machine hours, 320,000, right? So if you compare the balance, oh gosh, I don't have the number here, but you compare the balance, you will find out that you under allocated something. So I don't have to calculate, 3.2 times 320 is lower than actual. So we want our manufacturing overhead to be zero, I think it's 34,000. I'm sorry, I don't have the number here. I just pretend it's 34,000 here, right? But you want to be zero, so you have to credit your manufacturing overhead 34,000. And when you debit, you didn't allocate enough. We said your allocated goes to the cost of goods sold, right? Your allocated goes to working process, goes to finished goods, goes to cost of goods sold. You didn't allocate enough. So this shouldn't be 160. I'm just saying, should maybe 170. So this should be 980, right? So you didn't put enough cost of goods sold. So you have to increase your cost of goods sold by your under allocation. Okay. I don't know, after watching this, you feel better or you feel worse. Hopefully you feel better. If it doesn't help you, just try to understand, read the textbook, being honest, try to memorize it. More practice helps you to understand. If it helps you a little bit, that's cool. Thank you. Let me know if you have any question. Thank you.